Part 2, Standard Candles versus Heikin Ashi Candles. Before you learn candle patterns, you should know there are two types of candles. The most common are standard candles and Heikin Ashi candles. Standard candles show the actual open, high, low, and close price for each time period. For instance, for the 1 minute, you see the high, a low. For the 5 minute, you see the high, you see the low. 1 hour, you see the high and you see the low, and so on. They're great for precise entries and exits. Now, Heikin candles are different. They use an average of price data to smooth out market movement, making trends easier to see and filtering out a lot of the market noise. The trade-off is that they don't show the exact opening and closing prices. These are what we call momentum candles, Heikin candles. If you're just learning a trade, I recommend mastering standard candlesticks first, then using Heikin Ashi later as a tool to help identify stronger trends. Now, if you're trading with a group and they're using Heikin Ashi candles, I recommend using what the group uses during those calls. But if you're just learning a trade, look at the regular candlesticks first before you migrate to Heikin Ashi candles. Follow more for part 3.